Price is the result of countless factors, and it's always second in the story. To get a true edge, you need to see what happens before the price even moves. This is what separates good traders from great ones. The price means nothing until you understand what's behind it. Retailers think patterns form because psychology repeats, but it's not necessarily true. It has something to do with it, but it's not everything that you should focus on. 90% of the reason as to why a pattern exists is because the liquidity mechanics repeat. Think about a head and shoulder. The price will rally, lots of momentum. Investors take some profits. Based on the trend and continuation, people will think it will continue higher. Price continues higher. There's not enough volume. Mean reversion algos kick in because there's not enough breakout volume because somebody sold a large position. This happens, right? This topping formation. Investors think there's still hope. People continue, or traders or investors, it doesn't really matter. Investors still think there's hope. It continues in this way. This position was sold at the top by big money. They assume it won't go higher because of the position size. They get even better average cost. They go short once again at this point. Price makes a spike down. Price will begin to come down because they'll have a trapped liquidity in this area, meaning they're selling to the people that are buying. Simple. Now let's flip this the other way for a head and shoulder. Let's say, same exact thing happens, head and shoulder, right? At this point, there's people getting on the sell side. What will happen then? Oh, time to buy. Liquidity activated in that area. How do you know which is going to happen? You don't with the price, I'll tell you that. You can with option flow. And it doesn't matter if you trade futures, equities, or options. The first thing that happens before any move, before the price moves, is people bet with the options. So how do you use that with this? In this situation, the head and shoulder formed, we were tricked, we went bearish, and then institutions purchased because we were on the sell side and they were on the buy side. This could have only been seen with the option flow. Couldn't have been seen with anything else. Liquidity and spotting liquidity is a skill. It'll teach you that the chart means absolutely nothing and is 90% noise. This is how the market moves. If the market moves on liquidity mechanics, then I should focus on liquidity mechanics. And I shouldn't focus on stupid patterns and whatever the hell that shit is. So, if you look at this system, retailers go long, in this specific instance, because it's reversing, they want retailers to go long, they spike it down again, they engineer the liquidity to stop out, just simply because if big money needs to enter, they need someone to sell it to. Me and you will be the position that they try to sell it to. You have to be able to spot it. They stop out retailers, and boom, reversal occurs because they already knew they were buying. So look at this, and who was trapped? It was the people on the sell side. The people who decided that they were going to sell this got trapped. The cycle of retailers losing and big money winning has to continue, and it always will continue, and you see it every day. Think like you got fired from Citadel, and think like you know exactly what they're doing. And you just have to understand that you're not there anymore, but you might be able to see it through the options data and where they're liquidity hunting, what they're doing. You got fired from Citadel, but you still know what they do. That's the advantage you have over a rookie retailer. A pattern is always formed because smart money accumulation plus one side gets trapped. That's what a pattern is. A pattern is smart money accumulation and people getting trapped. What side gets trapped and what side of accumulation is happening can be determined through the option flow or even the asset flow, but most likely the option flow, because you need to see where the bets are. It's one thing if shares come in as a hedge for puts, but if that's the case, then you think it's bullish, but it's not. In the situation of the head and shoulder, if they're bullish and they're printing a head and shoulder to get people to sell, but they're buying calls, then that's just exactly what that is. Liquidity mechanics. And you thought it was a head and shoulder, but it's not. When you look at charts and you look at them in the past, you see, oh, this was a trend, this was a consolidation, this was a bottom, this was a top. You have to understand that in real time as well. I decide to look at, is this consolidation, is this a trend, and trade based on that. I assume things are in trends and trade them based on that. And that's important compared to making an entire speculation. Since you're gambling, you have to understand you're gambling and take that into account. I don't even use stops because I trade options. If you trade futures, it's a very different thing. But the way that we see this first is just like me and you, whales are also early with timing, meaning me and you can follow them for cheaper. That's the whole cue. If I want you to take away something from this video, I want you to think like a liquidity hunter and follow whales for cheaper and smarter. That's the exact methods that are going to make you money trading any asset. I long ES because of option activity on blue chips. That should open your eyes a bit. I don't trade based on price action, and I'm no different than you. But trading on price action doesn't give you everything you need to know. I don't know if this head and shoulder is going to be bullish or bearish. It's a stupid chart. It's a stupid chart. I can't tell you if this is going to be bullish or bearish, but I can tell you that this is in a liquidity activated zone, and I can tell you that there are calls being bought. Okay, bet on the upside. Simple. Even if I'm trading futures. So, if you've watched a lot of my videos, you might start seeing I am very focused on big money and retailers. I continue to nail them into your heads because it's so important of this cycle. The cycle of retailers losing and the cycle of big money winning. Always going to happen, and everything else is noise. Everything on the charts is noise until you understand what to look for and what context matters. But 90% of what else is on the charts is just useless noise. I have limit orders in my head for what prices I want to see things at before I even consider adding them. I don't look at charts and say this is going up or down. I look at charts, draw paths in my head, say if this gets to this area, I'd like to consider adding. And if that's the case, I'll look for option flow. What big money might be doing is liquidity activated. What are other people saying? And all these are just grains of salt that add to my final decision. I hope you learned something from this. Please subscribe and like if you did.